Stock investing. I made over 6,500 within 2 days on January 15 and January 16. In this video, I'm going to talk about 6 company earnings this coming week and which stocks do I like the best. Welcome to World Traveling Millionaire Stock Investor and Option Trader channel. Comment down below where you are watching from if you have any questions. S&P 500, the past 5 days, it barely moved, but what's important is year-to-date performance. S&P 500, 1.19% up, which is good news. You only want to see stock market opens positively the beginning of the year. Sometimes stock market, S&P 500 is 500 companies, best company listed on S&P US stock exchanges, right? So they usually take out companies that do not perform well, so you can be assured that these 500 companies perform really well, right? Based on their criteria. And also very important to look at Nasdaq too. Nasdaq the past 5 days it did not move so much. Year to date it stayed positive. It's good. It opened positive year to date. Very good. So we only have about 2 weeks into the year. 5 years, it's 80% plus open. Look at this. So very sure, as long as we hold the S&P 500 or Nasdaq, it's very hard for you to lose money. Just do not get panic and sell it. Okay, just keep DCA holding. There are lots of drop crashes. It doesn't matter. The stock market over time goes up. That's pretty sure, right? So really important. Nasdaq is mostly technology company. Right now, Nasdaq perform less than S&P 500. Why? Because technology stock pull back. So that's why it performed a little bit lower than S&P 500. And Dow Jones, look at this, the past 5 days, it did not move. Year to date, up 2.02% year to date. Pretty good. 5 year, it also positive, right? So that's why we invest in stock markets. Over time, stock market performs better than real estate because you see, this is about 16% every year. Real estate, 7 to 10% is pretty good. If it's 16%, stock market is much better, right? So what's going to happen this coming week? We have holidays on Monday, so you don't need to trade stock on Monday. Tuesday, nothing much. Wednesday, pending home sale. Thursday, we have GDP coming up, 4.3% forecast. Personal income 0.4%, PCE 0.2%, core PCE 0.2%. If the GDP comes out better than expected, which is good. If PCE is lower than expected, which is good as well, right? Because of the inflation. And consumer sentiment, if it comes out better than 54, that could be good news as well. PMI, if it's higher than 52.5, the previous week, that will be better. So what I'm worried about is the Greenland. If President Trump wants to take over Greenland, I think that consequences will be pretty serious. It could be like Liberation Day. The stock market could crash a lot temporarily, then recover later. Hopefully he doesn't take over Greenland with force. Hopefully there is no World War III. That's it. We're going to look at stock number 6, Barnes & Noble Education. Year to date up 1.63%. 5 year. Look at this. It lost money. If you invested $100 5 years ago, you will only be left with $1.65. That's pretty terrible investment. Now only 297 million, not even $1 billion company. You see, this is a childhood memory. Have you ever gone inside Barnes & Noble and read some of the books and enjoy your time? Yeah, that if you had congratulations, you have enjoyed great times, great old times. Now majority people, young people, they don't even go to bookstore anymore. They only use internet. So that's why when you invest in companies, you look at the future. Does this business grow every year? Will it be the future of the business of the future, right? That's very important. So that's why I don't want to invest in Barnes & Noble, even though I love both, because there is no demand. Netflix, stock number 5. Year to date down 3.29%. Now this is now one of my favorite stocks because Netflix economic mode is getting bigger. They are advertising. They are free advertising tier. The lowest tier gonna have advertising. If their advertising revenue grows pretty much well, Netflix could become a $1 trillion company, right? With the AI technology, if they don't need to pay actresses and they can create AI movies, the cost will go down. Just imagine, right? Netflix making AI movies. Oh, the cost gonna go down. Content creation gonna go down. So that means their profits gonna go up. Right now, Netflix is overvalued. So I could just sell put option, right? Just wait until Netflix reaches my my price point. So, but hopefully they could go up. They used to hit over $133. So hopefully, yeah, it's gonna jump. DHR Horton Inc. Year to date 7.03%, year to date up. Then 1 year, see DR Horton. The past year 5.63%, it did not move. 5 years it beat S&P 500. So when we look at companies, could this be a great company? Number one criteria that I look at, these are my criteria. Does it beat S&P 500? 124.86% versus S&P 84.17%. Yes, it beat S&P 500. So let's move on to the second criteria. Has it been in business for at least 10 years? DR Horton founded in 1978. So yes, it could. It also meet my second criteria. The third criteria, important. Has it been a public company for at least 5 years? Let's look at this. Yes, it has been a public company for at least 5 years, which is really good. So this company could be a great company. Do I like this business? Real estate. I really prefer AI and technology, so that's why I'm not investing in real estate. It doesn't mean that you should not invest in real estate. If you love real estate, if you understand real estate, and you do your own research, definitely you should go ahead and invest if you know that company. Number 5, look at the financial statement. The revenue, the net income, has it been going up? If yes, this could be a great company, right? So they also pay dividend 1.15. So do I think this could go up more? Yes, because once interest cut happens, then the real estate businesses will take up again. So I can keep this and watch this for trading. I may not invest in this company, but I may do trading. Next one, Johnson & Johnson. Look at this. Year to date, 5.45%. This is a company, if you are very curious, the past 1 year, 48.72% jump. Why am I so excited? Because look at 5-year trend. It doesn't beat S&P 500. It only 36.41% up. But look at this chart. Look at this, it jumped. So something happened, right? It usually range between $156, then it jumped, $170 down, 160, then 179. So between 140 and 180, it has been moving up and down the last 5 years. Look at this, up 179.9. It did not break out 180. Okay, it went down to 160. It jumped 170, 180. You see, then it dropped 150. Just like that. You see, it dropped 142 January 2025. Then after that, it went back up 166. Then after that, it dropped to 152. Then it jumped. What happened? It just broke up like crazy. What happened? Because their third quarter 2025 result was very good, and they raised their guidance too, and they have some cancer drug coming up really soon too. So there are some good news. So do I think this could go up more? Absolutely. Once the stock break out just like this over the past 5 years, most likely it's gonna continue to break out again. Right? That's very, very important. That's something that you should know. Once consolidation has been like this for the 5 years, the breakout could be very serious. So that's why year to date is up 5.45. 1 year is up 48.72%. Okay, so let's see how the earnings gonna be. But if they drop because of something to the earnings, hey, this may be a good time to get in. Or I could sell put option. Maybe sell it around 190 or 200. Just wait until it just dropped to my price point to get in. Next one, stock number 2, Intel. Intel could be good for trading. Year to date up 19.20%. This is a company, I wouldn't say it's a great company. The reason why it's been up over the past 1 year is because US government invested in Intel just because it's an American company. And NVIDIA also invested in Intel. They did not want Intel to fail, so that's why. So that's why it's not a great company. If I own NVIDIA or AMD or Broadcom stock like this, like them, I don't need to own Intel because it doesn't beat S&P 500 the past 5 years. But I could trade, right? Because a stock that has been going up could continue to go up more. So this could be good for trading. Number 1, Intuitive Surgical, ISRG. Year to date up 4.79%. 1 year, 9.71% down. 5 year is beat S&P 500. So this could be robotic surgery, right? Robotic is the trend. If they have robotic surgeon in future for minor surgery in the hospital, this company could be one of the top companies that makes medical robots. So specialized robots are the future. So if it dropped to 420, 30, I could get back in. I only profited. When it was 429, I bought call option. Then it jumped like crazy. Then we profited. Right. So this is gonna be in my watch list. 189 billion market cap. So they could have a long runway. So I will just keep it in my watch list. So which are the stock I like to invest in, and which are the stock I like to trade? For the stock that I like to invest in, ISRGs and NFLX. Yes, that's it. For the stock I like to trade, possibly in future, DHI, J&J, and Intel. Which stock do you like the most? Comment down below. If you want to learn more, go to Master Risk Stock Option Crypto, go to playlist. You can learn about stock investing, call option, put options, and advanced option. So you can know how to do. There's a playlist on how to, if you want to learn from beginners, right? Step by step. The playlist is gonna be right here as well. So if you want to reach out to me, comment down below, and you can have a mentorship call as well.